Give me your quick take on what you heard.
Well, it's interesting that we're seeing a bit of a reaction in the bond market, yields moving higher, suggesting people think the Fed might be getting out of the business of tapering. They lowered their growth forecast. They stretched out their unemployment forecast, and they lowered their inflation forecast over the short run. Doesn't sound like a central bank that is ready to start tapering anytime soon.
Okay, it doesn't sound like that, and I'm actually just going to toss it out to Julie Hyman. She's in the newsroom. So, Jules, Mike just alluded to what the bond market is doing. If you look at stocks, they are much lower. I mean, prior to this announcement, they were down across the board, but I see these losses have steepened. What stands out?
Well, they steepened, but we're still not even down 0.5%. So that's something we should note here. And even though we are not, as Mike was saying, not necessarily seeing the Fed leaning towards tapering, the market doesn't necessarily see it that way because there is some cautious optimism, particularly when it comes to the labor market. Perhaps in the language, folks are interpreting that to mean, yes, tapering is going to come. But indeed, you see that sharp movement downward in the S&P 500. Now we are hitting that down 0.5%. But again, still not a huge decline. Expect to see some volatility here as people try and read through the statement and figure out what's going on. I also want to take a quick intraday look at the Treasury chart. Mike just mentioned it, but you're seeing a commensurate move up in the Treasury yield as, again, people try and figure out what's going on here. Is indeed the end or at least some sort of wind down of the bond buying program coming to?